Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Shane Gallwey, fund manager of the Guinness EIS. Hello, Shane.
Hello, Alex.
First off, can you just tell me about Guinness and a little bit about your own background?
So Guinness Asset Management, we've been around since 2003, and we were set up by Tim Guinness, who's our chairman and chief investment officer. And we have about 1.4 billion under management. And the bulk of that is in our long-only quoted fund range. So we have flagship funds include the Global Equity Income Fund, the Global Energy Fund, there's an Alternative Energy Fund and a Global Innovators Fund. And then in 2010, I set up the EIS side. And since 2011, we've raised and invested over 140 million.
What does the EIS aim to do for investors?
So our Guinness EIS, we have a Guinness EIS and a Guinness Aim EIS, but our Guinness EIS is investing in private companies, and we're looking at growth companies that need scale-up capital. And we look to make at least 5 investments into each tranche, and we close tranches throughout the year.
Previously, you've been very much known for your asset-backed investments. This is no longer allowed under EIS rules. So how's that affected your investments this year?
Yes, so we did a lot of renewable energy investing, and in 2016 we moved to a more generalist strategy. And at the end of last year, as you know, when the risk to capital changes came in, we moved to purely growth companies that are looking for scale-up capital. And by that, it tends to be companies that normally have proved up the technology or product or service and are looking to scale that up. And that's where we like to get involved.
And can you give me some examples of companies you've invested in recently?
We've made 12 investments in 2018 so far, and investing about 27 million. And the most recent of those is into Alexa Chung's fashion business. And we've invested 1.7 million into that business. And it's a really exciting opportunity. It's turned over 5 million in the last year, and is growing strongly and has got some fantastic brand recognition. So it's a business we're excited about.
And have you got any other examples?
Great British Prawns, another one that we closed over the summer, is a prawn farm in Scotland. We invested in Sarah Healthcare earlier this year, which is care in the home, providing care in the home, and a host of others. MWS Technology, that provides apprenticeship trainers with software to manage that training the apprentices.
So it's a very sort of wide range, diverse companies. How much do you get involved, and what do you add to these companies?
We get pretty involved. I mean, we sit on the board of the investments we make. We put in place an investor agreement providing certain rights and vetoes to protect our investors. We get involved in monitoring the investments on behalf of our investors.
And because all EIS money is now going into similar types of companies, are you finding it harder to find deals?
No, actually, we've got a pretty strong pipeline. Our current pipeline is over 90 million, and of course, a lot of those we won't get involved in as we go through our due diligence on them. But and it changes week to week. Sort of things, new opportunities arrive and others fall away. But the pipeline is strong. There's a lot of good quality businesses looking for investment.
Talking about good quality businesses, all EIS investors really care about is the exit. Can you talk to me about successful exits in the past that you've had?
We've exited 26 businesses. Now, of those, 4 have been renewable energy businesses, and the other 22 AIM listed. And across those businesses, we have returned 1.27 times investment. And we haven't exited any of our generalist investments yet, because we only started making them in the last couple of years.
And any challenges you're finding with this particular type of investment compared with your traditional approach?
We've got a very experienced team, and so that's helpful in managing. But every business is different, and I think with a generalist approach, we recognise that. And I think one of the things we've been able to do is call on third-party due diligence providers, and we have a strong network of those providers to help us, because due diligencing a fashion business is very different from doing due diligence on a prawn farm.
Indeed, indeed. The new model means not everything's going to go right. Have you had any failures yet?
No, we haven't had any failures in our Guinness EIS yet, but you're absolutely right, and I think we recognise that in the way we construct portfolios and in our target return actually. So when we make an investment, we're looking for at least a 2 times return. Remember, we're not going in early stage; we're going in at a slightly later stage of the investment. But also across the portfolio, we target in excess of £1.25, but recognising that obviously not all those investments are going to return over 2 times, and there will be some that underperform and others that do very well.
So finally, Shane, I want to put some money into an EIS this tax year. Why should I invest with you?
Everyone is different, and there are funds focused on different sectors and different stage of business. I think what we offer is we look to make, as I say, scale up investments, so slightly later stage businesses. We look to give you a spread of investments, at least 5 investments per tranche. And we invest in a timely manner. We say we'll invest within 12 months, and we've actually made investments considerably quicker than that.
Shane Gallwey of the Guinness EIS, thank you very much.
Thank you.